Good evening, traders. It's 7:50, 10 to 8 p.m. on the 21st of June. So, excuse me, I'm going to run through my setups. Let's take a run through the markets. All right. Also, just trying to organize my desktop space. There we go. That'll do. Okay, cool. Okay. Let's start off. So, euro dollar has triggered. That's in. So that has triggered from yesterday. Sterling has set up. This is a setup. So that looks good for today. So I'm going to update this, go to 21st. This is a setup. I'm relatively happy with that for now. Aussie dollar against US dollar is a setup. There we go. I like it. I'm going to add that in. AUD, USD, up. Kiwi almost certainly has done something similar. It's the dollar very much in control. Look at that swing low. It's beautiful. That is technically still a valid entry. Still a valid entry. It's not the best one. You can put your stop loss below this one. So there's your swing low. Confirmed uptrend. We're now on top of the moving averages, bouncing off there. It's bullish, guys. It's not bad. We have a weekly downtrend, which isn't ideal, but it's not bearish. It's not that weak. So that is a valid setup. Entry. So let's talk about advanced entries. The most straightforward one is an entry above the high tomorrow, stop loss below the low. That's the safest swing low placement for stop loss. More aggressive would be a stop loss below this candle. True. The most aggressive entry would be here on this blue line. So what's going to happen is tomorrow, because candles overlap, so it means that tomorrow there will likely be a candle that does this. Opens, comes down, goes up. So an entry here makes sense. It's going to be like think about it. It's an overlap. It's a 382 retracement, a 50% retracement. 618 is a bit too much, but a 52, 382 is feasible. So you can go down to the 1 hour and look here. And then what I want you to do is, where do you think there's a level? And I would say that's the level there, which means to me, that's where my entry point is. Does that make sense? So in other words, I'm counting on there, going back to the daily, I'm counting on there being a retracement. That candles overlap. Look at this. They always overlap. So here you get an overlap. Next one there's an overlap. Next one there's an overlap. So there's an overlap. Where is it likely to overlap? Look at the 1 hour. That's where there's a level there. That makes sense that it'll do that and do it. I like that because if it does trigger, maybe it won't. Maybe it'll just keep going. It could just keep going. But if it does come down and I get triggered off that level, it's precise. I could even risk, it's higher risk, higher reward, do a tighter stop loss. So then I could put my stop loss underneath this level, maybe underneath like here. It's higher risk, higher risk. Or I just keep it behind the daily. It's still a better entry. It's still a shorter entry to stop loss ratio than up here. That's an advanced approach and it carries with it a risk of not getting triggered. But the reward is also that if it does get triggered, you're going to hit your 1-to-1. It's a lower risk trade. You hit your 1-to-1 faster, you hit your 3-to-1 faster. Does that make sense, guys? So, Kiwi dollar. I really like that. Dollar yen. Looks like it wants to keep going. That's okay. All the yen pairs. Let's do all the yen pairs together. Euro yen's gone. I said this might happen yesterday. I'm not trying to be right about stuff. I'm going, I would prefer a deeper pullback, but it's gone. That's good. I'm happy with that. So I prefer pound yen. So pound yen is my preferred entry today of this lot. It's good. Aussie yen. Yep, absolutely. Aussie yen is a small inside candle, stop loss below the low. Prefer that. I like this. So guys, there's a lot of setups tonight. There's a lot of setups, which means there's more risk. because more trades just means statistically more stuff can go wrong. So the smart thing to do is to reduce the risk per trade. Find out how many trades there are, find out how many are on the yen pair. So if there's 4 yen trades, am I happy risking 2% across 4 trades? Because then it's 0.5% each. That's an idea. Experience says don't risk 1% on every trade. Just don't do it. The way the universe likes to work is that when you take a whole lot of trades, when there's a whole lot of setups, take a whole lot of trades, that sometimes they work out, but most of the time, half of them will spaz out. It's just too many setups, it's too easy. So reduce the risk. 0.5% max per trade. Max. Definitely stop losses. When there's too many setups, it's just too easy. The market just loves to teach you a lesson. Doesn't mean they don't all go and it's all amazing. That can happen. But out of situations where I've seen this, I can remember more times where they didn't all go, or some of them went to break even, but then the conditions changed. Okay, I've said my bit. There it is. Kiwi yen, not bad. It's also set up. It's a valid inside bullish candle. Kiwi yen is valid. I'm going to be here for a long time. I'm going to go walk the dogs and then come back and then place the orders tonight. But it's going to be a time. CAD yen, it's gone. It's not the best setup. Swiss yen also. They all look like they want to go. But the other ones have better, they're just better setups. Okay. Let's go back. Dollar Swissy, gone. We knew that was going to happen. Did I get dollar Swissy? I placed the order. I told you I liked it. It was a better setup. Let me be clear. When I say, oh, I told you this, I told you that, that's not me trying to get credit for getting it right. If you know me by now, that's just me saying, I said so, blah, blah. But it's not about that. We get losing trades here. They're all recorded every day. There's no hiding. There's no hiding from having the losing trades. But yeah, good. I mean, sorry, they did trigger. Dollar CAD. I got stopped out. I had a losing trade today. It was pound CAD. So from yesterday, in case anyone cares, my losing trades today were pound CAD. Let me have a quick look at that, because I did take the trade. So I went long on this one. How did I get triggered in? That's really weird. Anyway, I should have only ever got triggered in there. I got triggered in and stopped out. I'll have a look. But that was a losing trade for me. Okay, let's go back. Sorry, guys. Pound CAD. It's on its way. Wait, did I mention pound CAD yesterday? I did, didn't I? It's on the list, but I don't think I placed an order on it. No. Oh, that was a good setup. I didn't place the order on that one. Euro GBP, no. Euro yen we've done. Euro Swissy, I just said there was a continuation. I just said it looked bit bullish and I think it's going to go. That could have been entered. You could have entered above that high, stop loss below the low. Exactly the same we're talking about now. Entry above the high, stop loss there, or on that retracement. So go down to the 1 hour. So where would that 1 hour have been? Somewhere in this area. So let's go back to the 1 hour down there. Whoops. Where's that setup? There. So that would have been the area right there. And it came back and went off. Same idea. It's very cool. Hopefully that makes sense to you guys watching this. Okay, so this candle here, this one here, opened, went down to that 1 hour level and took off. All it did was every candle overlaps. So it does a move and then a pullback, and then a move and a pullback. And basically that's all we did was look on the 1 hour for where that level might be that it pulls back to. It's always about levels, market structure. Anyway, I didn't trade it, but that was day before yesterday. I think it was Monday or something. Nothing here. Euro Aussie, nothing. Euro Kiwi, no setup. The weekly looks kind of bullish. High, low, bullish. That could be a setup, not the best one. Pound Swissy. Engulfing bar. Pound CAD, maybe it was pound Swissy got triggered in and stopped out. Excuse me. That makes more sense. No, it's pound CAD. Nope. Pound Aussie, no. Pound Kiwi, no. Aussie Kiwi, no. That level is strong. If we get another bullish candle here, so if there's a bullish candle here, then it's a double bottom, and then it'll go back up. No. No, no. I mean, technically, this is still a setup over there. So that's Aussie Swissy. Aussie Swissy. Kiwi CAD, potential high low, I'd leave it. No. No. Okay, so that's it. So what have I got? Euro dollar's triggered, sterling hasn't. Sterling, Aussie, Kiwi, all against the dollar, all bullish. Pound yen, Aussie yen, Kiwi yen, bullish. And Aussie Swissy, bullish. All of them are up. All of them are bullish, all of them are up. This is a big jug. Tiny hand? No, I'm just kidding. It's a big thing. It's a beer fest thing. How much liquid? Okay, gold. I know you guys don't care about that stuff. I know. Gold's still trying to stay where it is, but there's nothing. Okay. I'm gonna get rid of that. That would have been a losing trade anyway. That would have been a losing trade. Silver, nope. Copper. Still looks okay, but it's still at resistance, so I'll be careful of that. Natural gas, beautiful. There's a setup. I'm happy with that. Natural gas. How often do I place orders on commodities like this? Natural gas. Good. So, I hope, if this is the first one you've seen, I recommend that you watch the last two. Because it's important to what I did yesterday was I hypothesized. I'm like, well, I'm bullish on this in principle, so if price comes down and produces a bullish setup, I'm going to take it. So, and the market has come back, produced a bullish signal, I'm keen. It broke above the 50 period moving average, it's coming back, it's producing a bullish candle off the 50 and the 10, like that's moving average support. Those are other things. Overall, I'm bullish. We've got bullish divergence. This is very nice and bullish. I'm bullish. I'm already in. I was bullish there, but I'm in from a couple of other things. So I'm in here. I'm not sure why, and we're still in on that trade. So I'm bullish on that. So that's good. So in other words, that's good. It's a natural. This is the beautiful thing, and this is what I love about technical trading, is when you kind of make a plan. You say, okay, if price comes back to this level, that should be the right level. There's lots of support resistance there. There's lots of other stuff. The trend looks good. If it comes back there and produces a bullish signal, I'm going to take the trade. And then it does. Even then, you still have losing trades, but they're far fewer than the winning trades. You have way more winning trades. Crude oil. No. Yeah, bullish. Just trying to go up to that level. Wheat. Woof. That's gone. No pullback. So there's no setup there. Sugar's just trying to go up to that level, but there's no trades there really. Oh, because I highlighted. No, I didn't. No. There. And now I put the arrow there. There's our setup. Okay. It's a potential setup. I like it. I might go in at half risk. I said if it produced a bullish candle, I'd take the trade. That's pulled back to the moving averages. That is a potential setup. It's not green. I'd love for it to be green. But the market's going to go for a couple more hours. Could close green. So one of the things you can do is if you don't get the green candle, so if you don't get this, you can trail an entry above the highs of these coming down. And then if tomorrow it just takes off for some reason, you're in. But I needed it to pull back to this area. It's a good area. I do think we're overextended on the weekly. So yes, there could be a deeper pullback. Could happen. We could have a deeper pullback on these. But I'm okay. So listen to what I'm about to say here. I'm okay to risk 0.5% on the idea that it might want to keep going first, and I might get 1 to 1 or 2 to 1 or 3 to 1 out of it before it has a deeper correction. If it does decide to trigger me in and stop me out and then come down, I'm okay with that. I've assessed that as a real risk. And the third option is it does come down and doesn't trigger me in, so there's no money, no loss. So there's 3 situations there, one which loses money, one which doesn't, and one which makes me money. And I've allowed for that. My brain has allowed for it. This is a possible bottom of the range in a box, second bullish candle, double wicks there's double bottom. It's in a very weird area, but it could be something. FTSE, no, doesn't look bullish. DAX, oh, I highlighted that as a possible. No, I've highlighted divergence, so I'm just marking it. That's why I think we could have a bit of a pullback. Let's see what happens. S&P, ASX looks fine, just needs a pullback. There we go. There was a pullback there and it's taken off. I didn't take this, it's a Nikkei, I didn't trade it, but there it is, it's on its way. Okay, Apple, possible buy scenario. Okay, possible. I own Apple, I haven't traded it. I own Apple shares, but I haven't traded it. But it could be a trade. The next time I buy Apple, it'll be here in the move on the weekly. I only buy the shares on the weekly pullbacks if anyone cares. Amazon. Let's leave it. No. No, it didn't break the high, but now we're in the right area. So here would be nice to have a bullish candle now in this area. That would be good. So if it is going to turn around, something's going to happen tomorrow that's going to spike the markets to the upside. They are overdue for a pullback. So you have, this happens. You've got daily setups, weekly is possibly trying to produce a swing high. It really just depends. The market can be really bullish and then it'll have a much bigger correction down the line. So right now we're in one of those things where it is either going to correct now, it's going to keep going. I know that's an obvious either or, but that could be the case. That could be something. Glencore, possible. It's broken above the, oh, wow. Okay, take note. Take note. So we've been under the 50-period moving average, finally broken above it, come back, we're on the other side. We're in the 10 and 20 moving average buy zone. That could be a solid. Could be a solid thing. We're still in the buy area here. Could be good area for this turnaround. Could be there could be some stuff there. That was an outside bullish candle. Coca-Cola. It's technically an uptrend. Higher lows, high highs. Just very messy. This is looking like it wants to break out. This looks like it wants to break out. There's like a flat level breakout there. That's trending higher. Flat level. Interesting. It's BP. It's BP. And there's a potential level of support here. Interesting. Just going to note this. I don't like them because they're correlated, highly correlated with oil, and oil's not looking great. So for that reason, I'm not really a fan of trading them. General Motors, it's in the right area. JP Morgan, right up at resistance. Adidas, there we go. We had a pullback in this area. I was looking at this one, not that one, but it's taken off. It's good. It's really a beautiful pullback and a takeoff. Beautiful. Meta, let's leave it. Morgan Stanley, could be. Could be. Let's look at that. Nvidia, oh man, it's in the danger zone. But I looked at Tesla. Let me show you something quickly. I just did a webinar for Finaco Bank. And I looked at compared Tesla to Nvidia. So if you look at the historic performance, Tesla had this big boost, then fell back. And then it had a massive boost again, and then had a bigger pullback, which happened with the rest of the market. Could something like that happen with Nvidia? This is a big move. It could do something crazy like go to 500 and then come back. I mean, I suppose it could just go wild and do this. But if I saw this 100 times over, this is about where it should pull back. It's overextended, should start showing exhaustion. But we'll know when we see a monthly a monthly exhaustion candle. It's not going to be a quick thing. It's going to take, when it comes down, it's going to take 2-3 months to come down. So it's going to slow down. So I would probably not expect Nvidia to die. I wish I'd said this during the Finaco webinar. I wouldn't expect it when I say die, stall, and then have a correction. It's going to take 2-3 months for it to do that. It could stay in the same place, but it has now reached the danger zone. It's definitely overextended. It's much more overextended than at its most in its previous history. twice as extended. Could it keep going? Yeah, but then it's a bubble. It's absolute bubble territory. It's not a good time to buy. Again, I would buy when it's had a correction much closer back down to the old high. This is a great place. Fantastic place for it to for me, I would say that I would consider it there and here. Those are good areas. So I'm just going to leave it. I'm already in. I got in on the weekly when the weekly crossed over, which was here. We did the head and shoulders. That was it. Boom. Broken on that. Stop loss below that low, or at least that's it. And an option. I did an option as well on it. Sell put option on that. All right. Hold on. We're back. What's this? Weekly. Okay. Let's go to Netflix. It's good here for, yeah, see, it just needs to stall. We might be on a verge of a weekly correction, but it's still too early to say. Excuse me. This trend line, we're probably going to break through that. We've got this level of resistance here. I needed to break through that. So I'm going to do this. I'm going to correct. It's changing. Look at the angle here. Straight down this angle like this, and now the angle's like that. That's bullish. Or at least it's done going down. So let's if you really want to be convinced when you break that, then it's for sure. I would put it. Okay, I need to keep going through this. Fine. Anyway, Spotify. Running out of steam, I think. It's running out of steam. It's hanging around this area a lot. Look how many days are here, and it usually moves. So it's running out of steam. Probably needs to take a bit of a breather. Yeah, I'm sick on this. There's a good potential setup there for Spider, FedEx. It's battling with that resistance level. Tesla needs a deeper pullback, but it's out of the danger zone. Vanguard, that could be a possible setup there. Could be. So lots going on. Cryptos. Boom. Ethereum. Boom. Solana. Blah, 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 blah. Who we got here? Anise, hi, how you doing? Sorry, I'm like, I get so caught up in my thing. They're good. All right, crypto. Oh, look at that one. Remember we spoke about this yesterday. If you haven't seen this, it's worth your while to watch yesterday's one on Mondays, because we spoke about what we'd like to see happen today, and I discussed at length what I think could happen here and how to trade it. So that's great. This person is almost potentially, you'd be up almost at 1-to-1. Okay, what's my bias for gold? All right, let me go and do that. There's nothing else there I want to talk about, so let's have a look at gold. So, all right. This is my kind of, if you heard me say this before, I'm looking at your comment on the side. That's what I'm looking at. So if you've heard me say this before for my weekly analysis, I apologize. This candle in the monthly, I was expecting that to close heavily bearish because it's rejected that level multiple times. And if it had closed right near the lows, I would have expected a stronger push down. But it actually didn't. It actually pushed a little bit. It pushed back a little bit. And the next candle hasn't really followed through. And we're on the 21st. We're almost at the end of this month. So what does that mean if I just look at the monthly big picture? It means that actually it doesn't really want to go that much further down. It to me makes me feel like this area is where gold is likely to turn around. So like this area here. Somewhere in that area, I think it's got the potential to turn around. So for me, I'm going to be looking for one bullish month. That'll be my thing, a bullish candle. Anywhere that breaks the high of this one, even because sometimes what will happen is we'll be in the middle of the month and it'll be just taking off. So if it breaks the high of this month, next month, as soon as it does, I'm going to be in. And that'll be bullish. So the problem is that there's not enough sellers to commit to a downtrend at this time, and there's not enough buyers to turn around. So it's basically in what's that expression? Purgatory. It's just in a horrible place where it does nothing. And when you look at it on a weekly basis, you can see it's just range bound. So basically, for me, my actions as a trader are to wait and see. In this case, wait and see. I can set an alert. I need it. This is what I would need it to do, is to break this sort of, I'm just putting a line in the sand, a general low. We have a series of lower highs. I want it to break that, or at least do something to it that then says to me, I'm not as bearish as I was. So it has to come back up. Once it breaks through this, once it breaks this little patch of, highs here, you can see there's a bit of a cluster here. Once it breaks above that, then I think it's going to be signaling that it's going to move to the upside. Right now, there's no evidence saying sell. It's the green area is a really good area for it to turn around in. So there's definitely, for me, no selling opportunities. I'm more neutral bullish than I am bearish, if that makes sense. And then I'm going to wait for it to start to break higher. What would make me be bearish on it would be a solid candle that closes near the low, that is basically showing you that the sellers have broken through the support, and there's no more buyers propping it up. Hopefully that gives you a solid one. Of course, gold's going to hit 3,000. It's definitely going to hit 3,000. 100% that's going to hit 3,000. Yeah. I could tell you why, but that's a 20-minute diatribe. That's a 20-minute diatribe. I'll just talk and talk and talk, and that's a 20-minute. It's actually should be a... there's a lot of reasoning for it. I'm not being conspiracy theory or anything. There's a lot of history and a reason why gold is definitely going to hit 3,000. The question is when? It could be in 10 years' time. I mean, obviously, but yeah, it's going to hit 3,000, yeah. At some point in the future, yeah. Look, not far in the future. It's probably somewhere between the next 2 years and the next 10 years, probably, yeah. But yeah, it's absolutely gonna do that. Let's put it this way. What I can tell you is this. The more, this is going to be weird, the more tensions escalate between China and the US, the more probable it is that gold is going to go on the rise. Basically, there's a lot of history behind it, but it's a currency of war. And before countries, when a couple gets divorced, what you find out is the moment they say they're getting divorced, you find out actually they've been unhappy or they've been fighting for a long time before that. So when countries go to war, that is usually the last resort. You find out that the tensions go back 5-10 years before that. So if you think from that perspective, the tensions right now are between China and the US largely. They're not that bad, but they could be at the beginning stages that lead to tensions that lead to war in the next few years. There's no sign of those things. I think the US and both China want to avoid that, but they could get to a point where they just cannot. And Taiwan could be the spark. I don't think the US would go to war with China over Taiwan, but I think that Taiwan doesn't want to be part of China, and they could end up going to war, and then the US might have to step in. I don't think they want to, but they might have to. So, there it is. What is the highest do you think gold will ever hit? I don't think there's a ceiling on it. I don't think there's a ceiling on it because it could be 100 years from now we could still be trading gold if we're still around. I'll tell you what. Go and have a look at, watch this video. I've got the book. I've got the Ray Dalio stuff. He's good. Bridgewater Associates, he's an investor, but he's a historian as well. And the book explains it, but there's a video that will help take you through it. And I'm just going to share it with you quickly. And it sounds all doom and gloom. I get that. It sounds all doom and gloom, but the book goes into so much history that you understand the history behind it. Should be. Do this. Watch this. Make the time to watch that. It's really good. It basically, gold, when countries go to war, they don't trust each other. They don't. They lose the trust in each other. And so they won't necessarily do trade with each other, and then their currencies, they don't trust the paper money. So they won't trust the Chinese renminbi, and the US dollar might not be trusted. They revert back to gold because gold is like the same. And so gold comes into demand during times of war. Now, the plan is to try to avoid war. I'm just saying that tensions are likely, and if it happens, gold's going to keep going. And as long as humans are on the planet and we keep growing and we keep infringing on each other's spaces, and certain economies rise and fall, gold will always become the thing it'll always be the thing in the middle. Okay, sorry about that. For anyone, I hope I didn't bore you. That's not what I mean. That's it, I think, right? I did everything, right? Is there anything else that I need to do? Can I wrap this up? I need to go and walk the dogs, and then I'll come back and play place my orders. Any other questions? But I really recommend, if you haven't, you watch at least yesterday's one to just, it's a very quick one. It's only like 10 minutes to watch that. And basically that's it. I'm going to leave you with this, but there's lots of orders. Just to recap on the ones I really like, there's some potential stock ones. I think I prefer the Apple one. I think I quite like that one. There's Apple. What were the other ones as well? There's definitely something potential with ARC. Oh yeah. Glencore, possible. That's a UK stock. You know, there's a couple of those, but otherwise, and then my favorite for me, and it still carries risk, by the way, natural gas is still potential to fail. So even though I've been waiting for it and I'm very confident it's going to turn around, I still will not increase my risk. Okay. Do I think gold is the best? No. So the question is, and it's a good question, do I think that gold is the best form of investment, long-term investment? No. Stocks historically, absolutely, and property historically are the best. The returns on them just consistently are much higher than gold. Gold is something you would do during periods of war and unrest, but in between, doesn't matter. Okay, so when life is good, which could be for 75 years at a time, gold doesn't matter. Okay, it's a security. You want gold, you want some gold, but you don't want all of it. Maximum 25% of your wealth in gold, physical gold, and make sure you have it somewhere. Don't leave it in a bank somewhere. What I mean by that is, if you have it in a Swiss bank and then there's a war and suddenly Swiss bank won't give you your gold, that kind of thing. Okay. Anyway, it's phenomenal. Go read the book if you can. It'll just blows your mind. Because basically the logic is this: economies perform also based on policies, government policies. What's the central bank doing? What's the interest rate? How thriving is its environment, or restrictive or regulated is its environment for businesses and for banks and for people to borrow money and use money and invest and build businesses. How is that? And all of that, all those policies are shaped by politics. And so you've got capitalist, socialist, and all these different politics. So when you study the history of different countries that have been through all those different things, you see how the politics then shape the policies, which then resulted in certain economies, which then resulted in maybe a change of politics because maybe the economy wasn't doing well. Change of policies, it's phenomenal. Blew my mind. One of the most profound books I've ever read. Okay, ladies and gents, I'm going to let you go now. I hope you found this instructive and useful as always, and I will see you tomorrow. Okay.